Hello to all traders and welcome back to another market review brought to you by Orbex. So the FOMC didn't really throw up any surprises last night. We saw the Fed will probably reaffirm their stance that it will have higher rates for longer, even though we have probably reached the peak of the rate hikes. It doesn't look likely that they're going to be anytime soon lowering them, possibly into the next half of this year, but even then we'll probably see all the data coming out of America, such as inflation, job numbers, employment rate, etc., the usual things that the Fed is looking at. So it's come such a long way to get down from these 9.1% that it was a couple of years ago, a 40-year high. So it's not really going to take any risks in it creeping back up to that level. So it was, as I said, quite predictable. Markets was priced in, but it hasn't stopped gold from jumping one more time. So we've got on the 4-hour chart at the moment, the yellow precious metal. And as you can see here, we are now trading just above the 2030 area. So if we think back not so long ago, just over a week, we were trading at 1988 and actually just below that. So we have crept up over $40 in that particular period. Okay, it isn't just the Fed that's moving the markets, there's obviously geopolitical tensions as well that are ongoing. So we could see another spike in the near term. But at the moment, if we just look on the technical perspective, we are just breaking past this particular false spike here since we had a crash down through the 2000 handle, and this was the first time in a couple of months. Since then though, we're going for this kind of choppy consolidated area here to see if we're going to have more consolidation, if gold can start picking up its pace, just another $5 or $6 shy of that. So it's not really out of the realm of possibility that we will see another upturn in the yellow metal, because let's face it, gold has been very challenged in the last few weeks as well. But what we're seeing at the moment on the RSI is this slight bearish divergence forming because we have peaked on the RSI in that overbought area. So if this does happen, we could see a little bit more of a swing lower. Let's just take a look on the DXY index as well, because obviously on the return of that sees the dollar collapse quite significantly, and we're now trading in the mid 103 area. So with that being said, we have had pretty much, as you are aware, gold obviously has a correlation against the dollar. When it's doing well, it's usually the opposite and vice versa on gold. So if that's the reading that we're getting at the moment, is probably going to have more of a downturn on the dollar, but it could actually find some major support at the moment, because the 103 area is a very psychological support zone, since we had some nice double bottoms here not so long ago at the beginning of February. So since then, as I said, you can see the dollar really starting to have this whipsaw effect to the upside, but since then this bearish channel is really challenging now, and it's really starting to take shape that the dollar is losing some of its momentum, especially on the forex pairs as well, where it's been doing so well over the last few weeks, really stamping out its competitors such as the pound, the Swiss franc and the Japanese yen. So let's see where this goes next, and obviously let's see how far gold can go as well, and we'll speak to you again next time around. So as usual, thank you again for joining me, and have a great trend day ahead. Bye for now.